the earnings of Wipro because the numbers were actually in line, almost in line, and sort of a mixed set of numbers coming in to the ET Now estimates. The revenue has come in line while the margin was also in line, but the profit figure was a bit lower. We were expecting profit to be above 3,000 crore rupees, but the profit actually came in at 2,870 crores, while the margin was EBIT margin was reported at 15.2%. The Wipro management has given in a guidance also, but let's go across to the management and listen out what they have to say onto the outlook going ahead.
Of our business, the demand environment, of course, and some direction for the coming quarters, okay? Then Jatin will go into greater detail of our operational metrics, and of course, there will be enough time for your questions at the end, okay? Q1 was another quarter of robust deal closures for us. In total contract value, we closed large deals to the tune of $1.2 billion, which is a 9% year-on-year growth and the highest bookings in 8 quarters. We booked 10 deals in the greater than $30 million TCV range. Total bookings from a TCV standpoint stands at $3.7 billion. Looking at it, we added 2 more new accounts in the greater than $100 million revenue bucket, taking the count of businesses that contributes more than $100 million of revenue per year to 21. So the number of $100 million account has more than doubled from 10 to 21 in the last 2.5 years since we started on this transformation. Now, all around us, in almost every industry, businesses have been reducing discretionary spends in response to the weaker macro environment. That's had an impact on our revenue as well. In constant currency terms, Q1 revenue grew 1.1% year-on-year. This translates into a growth of 6.1% year-on-year in rupee terms. That is very much within the previously guided range, but yes, we are seeing some softness in revenues. Despite that, we have held margins steady. Operating margins for the first quarter was 16%. This is, to be precise, 112 basis points higher than our operating margin in the first quarter of last year. We maintained margins by improving productivity in our fixed price projects, a better utilization of talent, and by managing our fixed cost. At the same time, we continued to invest in people and technology to build a more agile and efficient organization. This margin resiliency is especially significant. Wipro has undertaken one of the largest enterprise-wide transformations in the industry starting November 2020. And we are proud of the progress we've made since. The success of this transformation becomes clearer when you consider the magnitude of this change. And when you see that we have continued to perform while we continue to transform. On one end, we were aligning to market needs, and on the other, undergoing a deep internal transformation. Our focus on accelerating the transformation, along with maintaining undivided attention on client experience, on delivery excellence, will progressively translate into improved growth and margins. We recorded an 11.5% growth in earnings per share year-on-year. Cash flow has remained strong. Cash conversion was at 130% of net income. And finally, this quarter we closed our largest ever buyback, allowing us to return $1.5 billion to our shareholders. Now, our industry, like every other, is undergoing a seismic shift with the advancement of artificial intelligence. AI can and will fundamentally change every aspect of business. Anticipating this evolution, Wipro had started investing and building AI capabilities over a decade ago. We have delivered over 2,000 global AI engagement during this time. In fact, today, we are using generative AI for multiple use cases like enterprise knowledge mining, virtual assistants, content optimization, automation in software development, and for synthetic data generation as well. But to accelerate innovations in this space, yesterday, we announced a $1 billion investment in AI and launched a new ecosystem will bring together Wipro's full range of capabilities, including solutions, services, platforms, research, and intellectual property, as well as partnerships and talent funding and resources to fuel our growth in this area. As you see, we are placing responsible AI operations at the heart of all our AI work. Wipro AI 360 is meant to empower our talent pool and be ubiquitous across all our operations and processes and our solutioning for clients. This AI-first approach will unlock more value, more productivity, and commercial opportunities for us and our clients. But first, we need to train our people in this fast-moving field. Over the next 12 months, we will train our entire workforce, nearly 250,000 employees in AI, from hackathons to challenges on our talent crowd platform, Topcoder, to specialized trainings. We will leverage our blockchain-based DICE ID platform to become the industry standard for AI skills credentialing. Demand for AI specialized talent will grow exponentially over the coming years. We know that, and we will be prepared. Suba, our Chief Technology Officer, is here with us today to share more. Let me now talk through our strategic market unit performance, as in every quarter when we meet. In Americas 1, order bookings in terms of total contract value grew 37% year-on-year. Revenues for the quarter grew 1.5% year-on-year in constant currency terms. This revenue growth was led by healthcare and medical device at 9%, followed by consumer goods and life sciences at 7% each. High-tech, BFSI, are the two sectors that were impacted the most during this quarter due to softer discretionary spends. As a result, our Americas 2 market declined 2.7% year-on-year in Q1.